Hello and welcome to the January 19th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Bowley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Rhino International Corp, ticker symbol RINO. This is a $656 million industrial goods company that operates as an environmental protection and remediation company. It engages in designing, manufacturing, installing, and servicing wastewater treatment and flue gas desulfurization equipment, principally for use in the iron and steel industry in the People's Republic of China. Now, if you take a look back, you can see the stock was trading under $2 back in early March, and then again in late March. The stock has gone from there all the way up to $35 at the beginning of December, so it's made a huge run to the upside. Along the way, you'll see volume started picking up in July and August on the move up. Came back down, notice the 50-day moving average was holding here. Took another move up in late September into early October, and the volume really expanded on that move. And then it went into a consolidating inverse head and shoulder pattern. So you can see the left shoulder came down, went back up to 25 to print the left side of the neckline, came back down, put in the inverse head, moved back up to the right side of the neckline, and then came back down to the 20-day to put in the right shoulder, and then broke out above this neckline at $25. And notice the volume on that breakout was the heaviest volume that the stock has ever seen. Now, when it makes this breakout over the $25 neckline, $25 should be a pretty decent support area. And notice we have come down close to this level twice. Actually, on Friday, Rhino hit 25.04, so very close to this breakout level. I would watch this 25 level down to about the 24.50 and maybe even as low as about 23.75 to 24, depending on how you want to play this. It's a very volatile stock. I think accumulation from the current level all the way down to about $23.75 to $24 is certainly not a bad strategy, especially as quickly as it can move back to the upside. You can see that the MACD has fallen all the way back down right to the center line, so it should look to get some support right in here, just as the price is breaking below the 50-day and getting very close to price support as well. We had many times over the last several months where the RSI stochastics have been very overbought, but notice on this last bit of selling that we've seen in the last week and a half, take a look at the RSI and stochastics, 40 on the RSI and down at about 12 on stochastics. So some of the lowest readings on our momentum oscillators that we've seen in the, really since the climb began back in late March. So all in all, I think the stock looks good here. It is a very aggressive play. So if you're not comfortable with a stock that can move 10 or 15% pretty quickly, then it's probably best to avoid it altogether. But if you are an aggressive trader, I think this is presenting an opportunity down here again as you get closer to 25, perhaps even down as low as 23.75 to 24. To the upside, a move back up above the 50-day obviously is the first thing you're looking for. If you get that move, I think this one could move back up to about 32.50, which would be a pretty nice profit from the current level, probably about 22% from where we closed on Friday. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.